This is the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Any postings and or social media content are the views of the advisor and do not necessarily reflect BMO's position or viewpoint. The information herein is for Canadian residents only and does not constitute any financial, legal, tax, investment, or other advice. I'm Terry Evans with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. This is the Wealth Roundup podcast for the week of May 1st, 2026. Patrick, let's jump right into it. The markets, they are what they are, really based on what's happening with all of the geopolitical mishigas that is going on in the world these days, right?
Yeah, so we probably used this term last week. Markets are in this bit of a let's wait and see mode to a certain degree. But just kind of preparing for today's podcast and wanted to talk a little bit about the health of the markets. It's just generally where we're at is that, the S&P 500, we're down a little bit today, flat over the week. Canadian market down today, down about 1% for the week. Gold is down, still positive year to date, but down pretty close to $100 off of last week. Oil prices are sitting pretty much at $100 US a barrel, and Bitcoin has taken a bit of a cool off. But just going back to the S&P 500 and the TSX. So one of the ways, and there's obviously a zillion ways you can look at the market, but one of the ways I chose to take a look at it today was try to get a feel for the breadth of the market. And what I mean by that is, when we talk about the S&P 500, we're talking about 500 publicly traded companies that trade in the United States. When we talk about the S&P TSX 60, we're talking about 60 publicly traded companies that trade, Canadian companies that trade on the Toronto Stock Exchange market. But with where we're sitting at year to date is that we're sitting at, for both the Canadian and US market, we're sitting at about 3.5% year to date on the positive side. And we're here in late April. But taking a look at the breadth of the market is also another interesting way to look at the market. So how many companies within that group are doing well? Because we know that they're not all doing well. In fact, kind of later today, I'll kind of highlight a couple specific companies. But we can look at this market breadth and say, when we look at the US market, we can say that about 55% of those 500 companies that trade on the S&P 500 are trading at or above their 200-day moving average. When we look at the Canadian stock market, so the TSX, we can say that about 70% of those businesses that trade in Canada are trading at or above their 200-day moving average. So what that tells us is the Canadian stock market has a lot more momentum to it right now than the US market does. There's more market participants that are having a very good, performance with their stock price. And the US, we consider anything above 50% a healthy market, but we also know that the portion of the US stock market that is doing well, specifically here to April, is still very much the tech heavy portion of the market. So we're still seeing probably more concentration than we would like near the top. Although we consider both markets healthy, is that on a relative basis, the Canadian market appears to have a lot more momentum behind it, probably having to do with things like gold, materials, energy. And again, we talked about this from last year. Canadian banks have still done pretty good. So kind of an interesting way to look at the market, and something I think we should probably continue to look at is just what the overall health as compared to maybe just going and looking at the index performance on a year-to-date basis.
What about bank rates? We always talk about the bank rates coming out when they come out from the Fed or from the Bank of Canada and then the Fed down in the States. What about bank rates, not only here in North America, but worldwide? Is there any correlation between what's happening with the bank rates, even broad bank rates across the world, that affects our markets on a daily basis or weekly, monthly?
Yeah, so really timely. We are going to get, we're going to get an announcement of the Bank of Canada this week, the Federal Reserve, so the US this week, And over the course of the next 7 days, we're also going to get the Bank of England and the Bank of Japan. So we're getting lots of these central banks coming out with their policy. So, what do we expect? Well, we're not expecting any rate cuts or rate increases here in Canada, the United States, and I suspect the same case overseas. So, why it's important to look at how these banks are acting. They are telegraphing to us whether or not they need to be in a mode where they are trying to curb inflationary pressure, which I think is something we're all talking about right now. Nobody's bragging about, how much of a deal they got on anything these days, because it seems like the price on everything is just going up and up and up. So we've talked about this before about how, raising interest rates is a way to slow down the economy and keep that inflation number within a reasonable range so that prices don't get out of hand and so that businesses can kind of plan for the future and, households can stretch a dollar to go and cover off all their expenses. But it's very difficult to go and raise rates if the economy is also not doing very well. So if if the growth rate has flattened out, and we've kind of talked about this idea of stagflation before, where you're getting rising costs but you're not getting any growth. So you're in a real tough spot with your economy. So this is a key week for a lot of economic data to come out. So we got the central banks. We also get some reads from Stats Canada. The US is going to publish where they feel their growth rate is year to date. And kind of our early expectations out of our research team, which we have a great research team, BMO Economics, is that looking really for a rebound, probably from both Canada and the United States off some softer numbers from the previous month. We're expecting a big increase in growth rate from the US, something over 2%, which is pretty impressive. And then even off the Canadian economy, better than last month, probably up another 25 basis points for the month or something like that. So lots of key data, but also a tough job for these central bankers to make a call on what they should do with rates. I suspect that most would rather prefer to hold the rates. I think the US would like to lower rates, but with the rising costs, primarily due to energy, it's going to be lots of debate on that strategy over the next 6 months.
Interesting news this week from the federal government, and it kind of goes back to something that I've seen a number of times on social media regarding Norway and Singapore. The Sovereign Wealth Fund. I've read a little bit about Norway, how they discovered some oil, as the story may go, and then it ends up being an investment back into the people. And I don't know what the figure is, $340,000 per person, Norwegian population that they have. But the federal government came out talking about a sovereign wealth fund for Canada this week. What's the significance of that?
Yeah, so we got teased this idea of the sovereign wealth fund. We get later today in the House of Commons, we get the spring economic update. And, I wouldn't say that this is kind of a first idea here in Canada. Of course, here in Alberta, we have the Heritage Trust Fund. The Norwegian sovereign wealth fund gets really a lot of press because of how successful that fund is and how big that fund is. I can't remember off the top of my head, but I believe it's the largest sovereign wealth fund in the world, which is pretty impressive because the population of Norway is relatively small. So, the idea that Norway had is that they knew that their North Sea oil wouldn't last forever. And so this idea to take a certain percentage of your oil revenues, oil royalties, and put it in the fund and largely invest the fund outside of Norway to diversify the fund would be able to provide future economic benefit from the citizens of Norway and in the future when perhaps their oil reserves are in decline. I think when Alberta, Peter Lougheed, Premier Lougheed, established the Heritage Trust Fund, the idea again is that Alberta knew that they were lucky and blessed to have good geography and good geology, and this idea that it wouldn't last forever. So put aside a portion of oil revenues for the future in order to diversify the economy. Now the problem that we've had in Alberta is politics have gotten involved year over year in that particular fund. And so while the fund was supposed to be for the future, well, the future came pretty early, meaning that they started to kind of dive into it right away. And so the fund is really, not to get political, but it hasn't maybe reached its lofty ambitions. And so the Sovereign Wealth Fund for Canada comes at a time where the federal government has these national projects planned to build out the Canadian economy, look to our strengths, diversify away from being so dependent on our largest trading partner. And so the Sovereign Wealth Fund is another way to be able to do that. And so the idea is to seed a fund over the next 3 years with approximately $25 billion. And so that will largely come out of debt, but it will also come from taking some assets that the federal government currently owns and either selling them into the fund or leasing them into the fund. So, take an asset like the Trans Mountain Pipeline. So, federal government currently owns that. At some point, they're going to want to divest from that. This would be a really great opportunity to take, a portion of that investment and put it into the Sovereign Wealth Fund. And this goes beyond just a federal government pool, is that at least the early talking points that we're getting on this fund, the average Canadian, Indigenous communities, perhaps other, wealth investments will be able to participate in this sovereign wealth fund. We've talked about private equity on this podcast before. We had Devin Guest come and talk about private equity about 6 months ago. Investments like infrastructure, so pipelines, deep water ports, communications, these are assets that are not easy to trade in a very liquid way. They are great projects in terms of low volatility and income producing, and they have a long amortization, but they make it difficult for someone to own, say, their average mutual fund or their trading account. But they're perfect for either something like a sovereign wealth fund or private equity. And so if Canadians can kind of invest alongside with the federal government as we kind of build out these mega projects, having this goal to build more capital potential for Canada, but also for a way for the average Canadian to be able to own some of these premier asset classes that typically are very hard for individuals to own. So, we'll probably hear more about it later today. I think it kind of ties in very well with just where the federal government is right now. And I think it's also, depending on how successful it is, it would be another way to attract capital to build out these projects, besides having to go and take more and more debt, to pay for these projects. The national debt for Canada is around $1.4 trillion. That's about $35,000 for every Canadian. And the interest cost on servicing that debt, I want to say, is around $50 billion a year, which is equal to about all of the GST that the federal government collects over the course of a year. So to be able to find another way to pay for some of these projects, if you could bring in some private investment to pay for some of these things. Now, it'll be interesting, actually, today in this economic update that we're going to get in the House of Commons later today, hopefully what we're going to hear is that on a year-to-date basis is that the federal government actually hasn't gone into as much debt as they originally had thought they would. So maybe we get 2 packages of good news later today.
Story developing.
Yes.
Yeah. For wealth
Stay tuned.
Yes,
Stay tuned.
Exactly. Yeah, film at 11. For wealth
Yeah.
management and to start your investment journey, you can find Patrick's contact info at www.patrickmleonard.com. And that is the Wealth Roundup for the week of May 1st, 2026. With Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns.
Have a great day.
This has been the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. I'm Terry Evans. The Wealth Roundup is part of the Reluctantly Podcast Network.